Welcome. In this video, we'll explore how the changing tax laws for Indian stock market investors over the past decade offer a unique opportunity to learn professional English. By comparing the tax regimes before 2014 and the active 2026 regime, you'll not only understand the financial impact, but also pick up essential business vocabulary and action verbs. Let's dive into the world where finance meets language learning, making complex topics accessible and practical for your career growth. Let's start with a broad overview of equity taxation in India. Over the past decade, the tax structure for stock market investors has undergone significant changes. These changes affect long-term and short-term capital gains, securities transaction taxes, and dividend income. Understanding these shifts is crucial for both investors and those looking to improve their professional English, as the terminology used is common in global finance discussions. For 2014, the Indian stock market was a relatively tax-friendly environment for investors. Long-term capital gains, LTCG, on equities were completely exempt from tax, and dividends were also tax-free for retail investors. This regime encouraged long-term investment and made equity investing more attractive. The language used to describe this period often includes terms like exempt and shield, which are important to understand in both financial and English contexts. Fast forward to the active 2026 regime, and the landscape looks very different. Long-term capital gains are now taxed at 12.5%, and short-term gains face a flat 20% tax. Dividends are no longer exempt and are taxed according to your income slab. These changes have made the market more complex, requiring investors to adapt and learn new financial and linguistic skills. Long-term capital gains, or LTCG, have seen a dramatic shift. Previously, investors enjoyed a 0% tax rate, making long-term holding highly rewarding. Today, LTCG is taxed at 12.5%, which means investors must plan their strategies more carefully. This change is often described using the verb incur, as in investors now incur a tax liability on gains. Understanding this term helps you discuss financial obligations in English. Short-term capital gains, STCG, have also become more expensive. The tax rate has increased from a flat 15% to 20%. Investors must now face higher taxes on short-term trades. The verb face is commonly used in English to describe dealing with challenges or inevitable situations, such as face a higher tax bite. This is a practical verb for both finance and everyday conversation. Securities transaction tax, STT, on futures contracts has seen a significant hike, moving from 0.17%, 0.02% to 0.05%. The verb hike is used to describe a sharp increase in price or tax rates. For example, the government hiked the STT on futures. This term is valuable for discussing sudden changes in costs or rates in both finance and general English. Similarly, the STT on options has been raised from a range of 0.17%, 0.1% to 0.15%. The verb hit is often used to describe reaching a target or a significant price movement. For instance, the new STT rates hit a record high. This vocabulary is useful for describing financial milestones or impacts in English. Dividend income, once exempt from tax, is now taxed at your personal income slab rate. The verb penalize is used to describe placing an unfair disadvantage or financial burden on someone. For example, the new rules penalize high dividend investors. This term is important for discussing negative consequences in both finance and English. Previously, investors could use indexation to adjust the cost of their investments for inflation, reducing their tax liability. This benefit has now been abolished. The verb abolish means to formally put an end to a law, system, or practice. For example, indexation benefit was abolished in the new regime. This is a key term for discussing regulatory changes. Let's focus on some action verbs that are essential for discussing finance and taxation in English. Words like incur, face, hike, hit, penalize, and abolish are frequently used in business contexts. Mastering these verbs will help you communicate more effectively about financial matters, both in writing and conversation. Most significant change in the tax regime is the shift in long-term capital gains taxation. Before 2014, LTCG was completely exempt, providing a strong incentive for long-term investment. Today, that exemption is gone, and investors must pay 12.5%. This shift is often described as progressive, meaning it happened in continuous steps. For example, the government has progressively increased taxes. The adverb progressively is useful for describing changes that happen in stages or steps. In finance, you might say, the government progressively increased taxes to curb speculative trading. Using this word shows a deeper understanding of how changes unfold over time, which is valuable in both business and academic English. Previously, dividends were tax-free for retail investors, meaning you didn't pay tax on the income you received from stocks. Now, dividends are taxed directly at your personal income slab rate. This move away from double taxation is a major shift, and the term abolished is used to describe the removal of the old system. For example, dividend distribution tax was completely abolished. Verb abolished is stronger than simply saying something was stopped. When a law or practice is abolished, it is formally ended and removed from the system. For example, the dividend distribution tax was abolished. This word is useful for discussing major regulatory changes in both finance and general English. Recent hikes in securities transaction tax, STT, on derivatives are designed as a deterrence. This means they are intended to discourage high-frequency trading and speculative behavior. The verb curb is often used in this context, as in the new STT rates are designed to curb high-volume retail churning. Verb curb is a high-utility word in business English. It means to check, restrain, or control a behavior. For example, the government curbed excessive speculation by raising taxes. Using curb shows you can discuss policy measures and their effects in a professional way. Let's summarize the key tax changes in a simple table. Before 2014, LTCG was 0%, STCG was 15%, and dividends were exempt. In the active 2026 regime, LTCG is 12.5%, STCG is 20%, and dividends are taxed at the slab rate. STT on futures and options has also increased. This comparison helps you see the overall impact and practice using comparative language in English. Word exempt means free from an obligation or requirement. In finance, you might say, long-term gains were exempt from tax. This term is useful for describing situations where certain rules or costs do not apply, both in business and everyday English. Slab rate refers to a system where tax rates increase as income rises. For example, dividends are now taxed at your personal income slab rate. Understanding this term helps you discuss progressive taxation and income brackets in English. Indexation is the process of adjusting the purchase price of an asset for inflation, reducing taxable gains. For example, indexation benefit was abolished. This term is important for discussing how inflation affects investment returns and taxes. Deterrence refers to measures taken to discourage certain behaviors. In finance, higher taxes or transaction costs can act as deterrents against speculative trading. For example, STT hikes serve as a deterrence. This term is useful for discussing policy and regulation. The adjective speculative describes activities that involve high risk and the hope of significant returns. For example, speculative trading is often targeted by higher taxes. This word is common in finance and useful for discussing risk-taking behaviors. Churning refers to excessive buying and selling of securities to generate commissions or take advantage of short-term price movements. For example, the new STT rates are designed to curb churning. This term is important for discussing trading strategies and regulations. Retail investor is an individual who buys and sells securities for personal account, not for another company or organization. For example, dividends were tax-free for retail investors. This term is useful for distinguishing between individual and institutional investors. In taxation, a slab refers to a range of income that is taxed at a particular rate. For example, income is taxed according to different slabs. This term is essential for discussing progressive tax systems. Regime in finance refers to a system or planned way of doing things, especially one imposed from above. For example, the active 2026 tax regime. This term is useful for discussing different policy environments. A flat rate means a single fixed rate applied to all cases, regardless of amount or value. For example, STCG was taxed at a flat 15%. This term is useful for discussing simple tax structures. To abolish means to formally put an end to a system, practice, or institution. For example, the government abolished the indexation benefit. This verb is powerful for discussing major changes in law or policy. Hike refers to a sharp increase, especially in prices or rates. For example, there was a hike in STT rates. This term is common in both financial news and everyday English when discussing rising costs. Penalize means to subject someone to a disadvantage or punishment, often financial. For example, the new tax rules penalize short-term traders. This verb is useful for discussing the negative effects of policies. To incur means to become subject to something unwelcome, such as a cost or penalty. For example, investors now incur a tax liability. This verb is important for discussing financial responsibilities. To face means to deal with or confront something, especially a challenge. For example, investors face higher taxes. This verb is useful for discussing challenges in both business and daily life. Hit means to reach a particular level or target, especially in terms of prices or rates. For example, STT rates hit a new high. This verb is common in financial reporting and everyday English. A shield is something that protects you from harm or risk. In finance, the tax exemption acted as a shield for investors. This metaphor is useful for discussing protections and safeguards. Narrative is a story or account of events. In finance, the narrative around tax changes refers to how these changes are explained or understood. This term is useful for discussing perspectives and communication. In finance, aggressive describes actions that are forceful or bold, such as aggressive STT hikes. This adjective is useful for discussing strong policy measures or investment strategies. To curb means to restrain or control something. For example, the government curbed speculative trading. This verb is widely used in policy discussions and business English. The word abolished is the past tense of abolish. For example, the indexation benefit was abolished. Using the correct tense is important for clear communication in English. Benefit is an advantage or profit gained from something. For example, investors lost the indexation benefit. This term is common in both finance and everyday English. Macro shift refers to a large-scale or fundamental change. For example, the macro shift in tax policy. This term is useful for discussing big-picture trends in finance and economics. In finance, distribution often refers to the payment of dividends or profits. For example, dividend distribution tax. This term is important for discussing how profits are shared. The adverb explicitly means clearly and directly. For example, the new STT rates are explicitly designed to curb churning. This word is useful for making your statements clear and precise. In trading, high volume refers to a large number of transactions. For example, high volume retail churning. This term is useful for discussing market activity and trading strategies. In summary, the shifting tax laws for Indian stock market investors not only impact your investment returns, but also provide a rich context for learning professional English. By mastering key terms and action verbs, you can communicate more effectively in both finance and business settings. Keep practicing these words and concepts to stay ahead in your career and investments.